So on the shorter time frame, it was actually not a bad suggestion to say maybe we could get long, right? We sold up here, right after we reloaded somewhere down here, sold up here, and then okay, this is the bottom of a trend line. There was this momentum. It's called a hook from extremes when it touches this 200 line here. That's every time in the past it touches it, or not every time, but quite often. Look, reverses, and the bottom of the trend line, and short term exhausted. But is there something more going on for like a large, even zooming out even more? So okay for a trade, but to reposition a portfolio, you'd have to have, some risk parameters in for sure, and not be very confident because if we zoom out on the weekly, we're going to look at the history of Bitcoin here, and we'll go back to 2018, right? Okay, so for the entirety of the 2017 bull run, the orange moving average was over the blue. It's the fast over the slow, and when they cross, it's called a golden cross, and it marks a trend up. Pretty accurate, you know. And then when we kind of have multiple leg counts up, that flush up, and then a strong reversal, and then we sort of are building lower lows. Plenty of opportunities just based on price to get out and other indicators, but there's this thing that's the opposite of a golden cross called a death cross. And when that happens, the blue one goes above the orange, and that would be the fast one now above the slow one. And when you have the death cross, when the slow one's above the fast one, then it marks a bear market. And you can see right after that, kind of a fake. Everyone thought we were going to rally, more of a a fake out, and then quite a even from here, even if you didn't get it up here, this is around 9 down to 317, well over 50%. Obviously, the highs were at 19. And then, to even get break even again is from July 18th to May, over a year. So that's the death cross. Now, have they worked every single time? We'll just look at a couple other times, right? Here with this green heart, that's a time where it didn't work. And it was that anomalous event with the COVID thing. Now, notice there was the golden cross when the orange got above the blue, confirming this up move, and then we had another leg up. Then it flattens out. Then they start to pinch together and flatten out the moving averages like prices because they're just derivatives of price. But then right here, right, blue reversal, and then the blue did get above the orange, and then we did have a huge crash from 10 to 3. So it at least marked that. But then when we came back up here to test the death cross again, that's when it broke with this strong V recovery. And so that is a time right here where then the death cross didn't work out and we got a bull run, a huge one. Right. Okay. So 1 for 1 on these two, even though COVID is an anomalous event. Right. And then look at this one. This one looks a lot more like where we are today. Right. This is the 2021 bull run, golden cross. Right? Worked very well, right? Orange above blues, fast above slow, and trending up, right? Price will always start to give hints first before the moving averages do. So price broke down, and then you can see the moving averages start to flatten out, representing the sideways change in the market. And then we have a double top, right? One top, two. That's a reversal pattern in and of itself, a different category. But then we have the death cross again, where the blue goes above the orange, where the slow goes above the fast. And in this sense, right, it actually penetrated the cross and got a little bit above it. And in this one, it actually did touch the cross. Right, cross there, and then we touched it, and then so and then after we get the death cross, what happens? Bear market, a price decline from 48, around 50, let's just say, to 15. But obviously the tops are much higher, but that is a significant drop. And then it's not just the price decline. Uh, on the vertical, we got the horizontal time component, and this is, to even break even, January 8th of 2024, and confirmed bearish cross, death cross on March 22. That's it's over a year. um, Pretty scary stuff. But then what happened? to even break even, right? What preceded that was the golden cross, which let's just say you waited patiently and you waited for the golden cross around here, which was confirming a trend market at 29,000. And then look, this orange, the fast one, was above the slow one, the blue, called the golden cross. Golden crosses are trend ups, bull markets. And look, boom, held every single time, held this slow moving average until when we get the double top like here, and then we broke through it. Then we pop back up into it, and then it's like a dead cat bounce down. Now, we broke down this substantially, and we went sideways, built structure. We tried to go up and touch it, broke down really sharply, which was pretty scary. But we are at a trend line, so I'm not surprised that we got a bounce. But is this a dead cat bounce, or is this a real start of a new bull market? I think best case scenario is that even if we do get a rally, just based on the times where the death cross worked out, it did go up and penetrate this even in 22 when it's slightly higher. We could go up here and test this maybe around 100,000, 102,000, maybe even. But if you were reloading, let's say your portfolio, and to just hold through that blindly, that could be the actual reversal point. That's how I was able to call this point because I said to myself, yeah, well, the other times it did touch it and go higher. I'm not from a risk reward perspective. I don't even care. Like from 90 or from 98 to 100, it's like $2,000. It's not worth it to me from a risk reward perspective to keep holding through a signal when this is a sell reversal signal. This is a very tricky because this time here when it pulled back, it was still holding this golden cross moving average here, where the slow moving average was intact. Boom, it held. This time it broke below that. That's similar market context to these other starts of bear markets. So that really concerns me to just give a portfolio signal. I mean, it's okay maybe to switch your bias a tiny bit in terms of maybe if you were trading. You know, I could go back in time a little bit more. Let's see, this goes back to it should go back more on Coinbase, and maybe I could find an exchange with more data because I'd like to see another historical point where there was more data, but at least 3 out of 4 times, and the one time that it did work out, where the death cross didn't work out, and we did have a bull market in spite of everything, was COVID. So there's that to contend with. So I think that could happen a rally up here, but even so, like the way that we came down here, it makes me even kind of nervous because even on the daily here, that this is what I was writing about in the channel ahead of time. You see how when it looked really strong up here and there was the need, you felt the need to buy. This thing's called an inverse zero line reject. It indicates the momentum is going to reverse. Like I almost was giving a short. I told everyone maybe to short, but I was a place to take targets, but based on the momentum, not to. You see how I was shorting this zone last week, and then we came back up there. That was another thing on a smaller time frame where I was like, okay, I wouldn't want to go long today, but based on the strength going up there, rotating off the zone, I didn't initiate another short on first test. I want to kind of wait for see how this starts to top build, and then you get like a wide double top and then a little tail that would increase the edge. Also, I wanted to get maybe into the zone, but I'm not surprised that it reversed here because it was rising in agony. So these are all the kind of more contextual things that I'm seeing. Like yesterday, I shorted here, and then I took off half here, thinking maybe it would break down. But like back and forth, the longs did step in here, and then we got to move up that broke out because there's this high volume node here as well. But as much as we're rotating off this daily trend line, there's these higher time frame warning signs of possible reversal signals, even if we do get a short-term rally back up to 100,000. That would be a place 100 to 103, like where this death cross is, would be definitely a place to take profit. But I wouldn't just like blindly hold a large portfolio position with no risk management. If you don't have a mental stopper, okay, if we do establish a position, you're going to get out at X% lower no matter what, because I'm telling you, this could be a situation where you're just in disbelief that we keep holding. Like, look at this up here. Everyone thought this was going to be a breakout. I drew this zone because this was a lot of confluence of resistance. Sellers sold there. They're going to sell again. That was the start of a downtrend. If you go back in time, this was support, right? Where we launched up here. So that was now broken support, now acting as resistance. I can go back in time more. There's a high volume node here. There's a selling tail here. So there's all this structure that it still needs to go through that could attract, sellers. And this is not looking like a trend up day. It's not looking good. Not sidelining is a position. So it's not a bad bet just to see how things behave here. Um, and go from there because there might be an opportunity if there's a lower risk entry to possibly ride a portfolio up back up to this. But like I said, you'd have to be really uh, strict with your risk protocols because if this does break, it could repeat exactly what happened 75% of the history, at least in this data that we looked at, where there was a death cross and it worked out. Because I think every single time it did actually go up and touch the death cross. This one it touched it. This one it touched it and broke it a little bit, penetrated and reversed. And obviously the COVID one was one where it didn't work out. Um, so this one would be the only one out of those that didn't go up and actually touch it. But based on how we reversed here, and then this bearish candlestick on the weekly from the prior week, it's a little tough to just be super bullish at that point. But there is still this, um, you know, support here. So yeah, I would just say for now, uh, caution is best, and there might be different ways to take part in this, but I think more information will be needed. So, all right, thank you very much.